Good afternoon. I'm Uwe Rempis, and thanks for joining our session today. But let me briefly introduce our company, LaSalle Investment Management, for those of you who don't know us. LaSalle is a global investment firm. We belong to JLL, the Global Real Estate Corporation. We are in total 700 employees across the world. We are organized in 3 different regions: Asian, Pacific, Europe, and North America. In total, we manage a real estate portfolio of 60 billion, or assets of 60 billion US dollars, in 3 sectors or 3 divisions, which is real estate, private real estate, securities, and also rerun debt strategies. We are a research-driven house, as you can imagine. We have a very deep capacity and doing global research together with JLL, but also independently from JLL. And what we publish every year is the so-called LaSalle ERG Index, which you may have heard. It stands for the European Regional Economic and Growth Index. And it's published since 2000, so it will be released now, end of October, to the public in its 18th edition. And what we are doing there is we are covering the entire Europe, which means 32 countries, 295 regions, and 100 cities. And we are measuring those regions and cities towards their economic performance, historic and the future outlook. And we then rank those cities and regions always relative to the European average. This tool, which is being published annually, is a very strong, powerful tool in order to set up real estate strategies. Because what we learned over the 18 years is that there is a strong correlation between occupier demand and the index. Now, my name is Uwe Rempis, as Richard just said. I'm the fund manager of the LaSalle ERG Fund, which is a product which we launched 2011. It's an alternative investment fund open for institutional investors, mainly pension schemes, insurance companies. And the topic of this fund is, as the name says, ERG. So the underlying strategy is investing in the strongest European cities and regions along the ERG index. Since 2011, we have now grown the fund to 19 assets in 6 countries, so with a total gross asset value of 700 million euros. Over the last 5 years, we've been able to deliver a very solid and strong performance of 6.3% total return and a 4.7 average distribution yield on the fund level. And as I said, the underlying topic of this fund is investing in the strongest European regions and cities. Now, why do we invest in cities? And this is exactly our topic of the panel today. First of all, it's GDP growth. As you can see here on the slide, for the 4 main European cities, which is London, Paris, Amsterdam, and Munich, compared to their average GDP growth over the last 3 years of the country, every major city grows stronger than the average of the country. On the right-hand side, you see also the index and how the cities, the top cities, the 100 cities are ranked according or in contrast to the European average. Whereas the average is 1, the 100 cities are at 1.16. This is the index measure. So that means the performance forecast for those cities are also much stronger. The second reason why we should invest in cities is liquidity. As you can see here, all the major cities, again compared to the country, have almost 2/3 of the takeover of the transaction volume compared to the country. What stands out here is especially Paris and Lyon, which is 2/3 of the transaction volume, but also Madrid and Barcelona or Prague. The only exception in that respect is Warsaw and Poland, which is quite interesting as I see. But until 2015, Warsaw accounted for 50% of the transaction volume. But this has come down mainly due to the strong logistic markets, which is more in the region of Poland. Now the third reason is performance. if we look into the MSCI total returns unlevered on property level, again here, cities compared to the countries, it stands out that Amsterdam, Munich and Lyon, for example, are much stronger in the 2007 performance than the countries. So again, this is just a very good example why it makes sense to invest in cities. Now to summarize, cities are the center of economic activity, and this is exactly what we try to measure with the EREGI index every year, which is a very good framework for our real estate strategies. Secondly, the majority, of course, is transacted in cities. The real capital analytics, for instance, is measuring the record level of liquidity in the European cities these days. And thirdly, it's the performance where we clearly see that the main cities outperform the regions and the average on a country level.